Abraham, good morning. Okay, so exactly 9:15, we will start. Now, I think I have only two. Hello, Abraham. Hmm. Good morning, everybody.
Good morning, Rev.
I hope you are all doing well.
By God's grace.
I want to express my appreciation to your kind gift. God richly bless you.
Amen.
So, can we start?
Yes, please. I think by 9:20, I'm trying to get to join. We have 4 minutes to 9:20, please.
Recording in progress.
Please, can we start?
Yes, please.
All right. The last time we did some work, I want to ask if someone has a question about it. Any questions so far on the previous lesson? If there's none, then today we want to look at bank reconciliation statement.
All right.
We want to look at bank reconciliation statement. We saw in our earlier lessons that you have your own book that you kept in your company or in your organization that involve your cash book, which has the bank column in the cash book. And any transaction that you send to the bank, you record it at the bank column of your cash book. We also saw that both credit and debit that happens in the bank also happen in your cash book. But there are instances where the items credited at the bank are not debited to the cash book, or items credited to the cash book in your company are not debited to the bank statement at the bank. And so these can bring some discrepancies to between your cash book balance and then your bank statement. The truth is that under normal circumstance, any money you put at the bank, which you recorded in your cash book, In other words, your cash balance in your cash book should be the same as your cash balance at your bank statement. But there are certain things that can happen which may make it differ. And these things, usually some are things that are unknown to you, some are known, but at the end of the month, you should be able to put together or reconcile the balance of your cash book with your bank statement. So that calls for what we call bank reconciliation statement. So in short, bank reconciliation statement is the act of reconciling your cash book to your bank statement, your cash book balance with your bank statement. Is that okay? So what are the basic purpose of bank reconciliation statement? We said that due to time differences, omissions, errors that could be made by the bank or yourself, there could be a difference. And the bank reconciliation statement, when it is done, comes to solve those differences. The balance of the bank statement and the bank account in the cash book mostly disagrees. And the bank reconciliation statement helps it to agree. So the bank reconciliation statement can be used to explain the reason for the differences and to identify the errors, omissions in both bank statements and then in the cash book, and that are corrected as soon as possible, usually at the end of the month. Because at the end of the month, you go for your bank statement and then you are also closing your cash book. And so at the end of the month, you are able to reconcile these two statements to be in agreement. Now, we want to look at the reason for differences between the cash book balance and then the bank statement. When I'm saying the bank statement, what I'm trying to say is that the statement that the bank gives you, I hope all of us know what bank statement is.
Yes, please.
And well, yeah, your bank statement is when you open a bank account at a bank, every transaction that you do, both deposit or withdrawal, the bank make an entry in that account for you. Remember, the bank is keeping that account for you. And so when you pay in, they credit you because they are holding it for you. And when you withdraw, they debit you. But in your own cash book, because it is for yourself, when you receive money, you debit it. And when you pay out, you credit it. So that the statement that the bank gives you to tell you the transactions that you have done within the period is what we call the bank statement. Now we are saying that there are some reasons that can cause set disagreement in the bank statement and your cash book. One of the reasons is what we call when there are uncredited items. When we say when there are uncredited items by the bank, this only means that you presented something to the bank or you make a deposit at the bank, but due to time difference or some reason, the bank could not credit your account. And so those items can be described as uncredited item. It could be that you send a check to be deposited into your account. The bank is supposed to credit your account, but maybe you got there late, or they had a lot of work on them, or their system even has failed them. And so they were not able to key the check or the payment into your account. So we call all those items uncredited items. Just as the name appears, uncredited, which is not credited to your account. I hope it's clear. So over here we said they are deposit paid into the bank. These items occur too close to the cutoff date of the bank statement, and so do not appear on the bank statement. They will actually appear in the next statement. So let's say if it is 31st March, and that day, 31st March, you send those checks to the bank. Your customers came to pay you plenty checks, and then you send those checks to the bank on 31st. You were expecting that the bank will credit your account, but maybe because there was so much pressure on them that day, they couldn't credit the account that day. They might credit it on 1st April. But when you take a bank statement for March, those transactions will not show on it. Meanwhile, you have received it in your account in the office. So you have debited your account with it already. But because the bank is not able to credit your account with it, you see that it is in your cash book, but it is not in the bank statement. It will rather appear the following month in the bank statement. So we say that uncredited items are bankings made shown in the cash book, but not on your bank statement. Items you send to the bank and it has shown in your cash book in your office, but it did not show in your bank statement. All those items are called uncredited items. Is that okay?
Yes, sir.
Now, the next thing we can also look at that brings differences to the cash book is unpresented items or unpresented checks. When we say unpresented checks, all we are trying to say is that checks that we issued to people to go and withdraw money, but they were not able to send a check to the bank to withdraw the money. And all those checks are called unpresented checks. Just as the name is, when you issue a check to somebody, the person needs to present the check to the bank before the bank can give them money. If the person did not present the check to the bank, then the bank will not be able to give them money. And so you call those checks unpresented. Is that okay?
Yes.
Then the third thing that can also bring differences between your bank statement and the cash book is where you have made a standing order. Standing order is an instruction a customer make to a bank. Say you give them an instruction that every month deduct this amount and pay to this person, or move this amount from this account to this account. It's an instruction you place at the bank that they should do for you periodically. So when you make a standing order, you put an instruction for the bank to do some payment for you, and you forgot yourself. Sometimes you might even not forgotten, but you may not know the exact date they may do it. And so when they do it, you might forget to capture it in your cash book. So you see that in the bank, the transaction has been made, but it is not showing in your cash book. That thing too can bring the difference between the cash book and then the bank statement. Then the fourth thing that can also bring the difference is what we call direct debit. direct debit. Now, when we say we debit your account in the bank, it only means that you've made payment. You've made payment directly in the bank. So direct debit, they are payments that hit your bank account or payments that are made from your bank account without your knowledge. Payments that are made on your bank account without your knowledge. Example is bank charges. Bank charges can also be direct debit, or some commission on some services the bank has done for you, or some account product that deserves some deduction. Then when we talk about bank charges itself, is the commission the bank charge on you for rendering services for you. At the end of the month, they charge you something. Sometimes even if they make some transfer for you, they charge you something. Those can be a direct debit. And the bank charge itself is the services they render for you, the charge for the period. That is the bank charge. I hope we got the difference. Now the 16 that can bring differences between the bank statement and then the cash book is what we term as dishonored check. Dishonored check. Dishonored, when we say a check is dishonored, honored, it means that the check has not been paid. The bank has not accepted the check. Then we say the check has been dishonored. You send it to the bank. They are supposed to honor it by paying, but they have refused to pay. So the technical term used is dishonored. So the check is dishonored. They are checks deposited, but subsequently returned by the bank due to the failure of the drawer to pay. A check can be dishonored for various reasons. For instance, if I issue a check to you to go and withdraw, I can call the bank and tell them that, oh, I have issued this check to you, but at the moment they shouldn't pay, they should wait. So when you send the check, they'll write on the check with red pen, RD. You see, RD. What that means is refer to drawer. Go back to the person who gave you the check. They won't tell you why the check is dishonored, or they won't tell you why they cannot pay, but they won't pay. It can also be that there are some irregularities on the check. Let's say the amount on the check is 5,000, but the amount in words is 500,000. That one too, the bank cannot pay. Or if the check has certain things cancelled on it, or maybe it's supposed to be two signatories and only one person signed, there are various reasons that a check may be dishonored. It can also be that there's no money in the person's account. It can also be there's no money in the person's account. Currently, the Bank of Ghana has prohibited anyone who knows that he's not having money in his account should not issue a check. If you do it, they will warn you. And then if you continue to do it, they will ban you from issuing check. They can even charge you. Even arrest you. Yes. Then the seventh thing that can also bring about differences in the bank statement and then the cash book is what we call credit transfer or direct credit. Don't forget the direct debit can also be debit transfer. And this one we are talking about credit transfer or direct credits. These are monies paid into your account directly without you knowing. For instance, someone is owing you, he has your bank account number, your customer, and then he decides to pay. So he go and pay. He has not yet informed you, and he didn't bring the payment to your attention, but the month has ended and you went for your bank statement. So you see that you haven't seen it, so you did not enter it in your cash book, but it will be in your bank statement. It can also be that you make some investment and the bank is paying you an interest, and the bank pay the interest, you don't know. So that will also not be in your cash book. So interest allowed by the bank can also bring a difference between your bank statement and then your cash book. Maybe you did fixed deposit and then you didn't roll over with interest. You said that each time the interest comes, the interest should be put in your bank account and then the principal should be used. And maybe you did 3 months and then the first 3 months has come. You see that they will drop the interest in your bank account and you don't know. So unless you go for the statement before you see that you have received an interest. All right. Now let's look at nature of the cash book and then the bank statement. Now, when you look at what we did in the previous days, we have cash book that has a bank column, and we say that the cash book is an asset account, so any increase in cash book is debited, and any decrease in cash book is what? Is credited. Is that not it? The same way we said the last time that when you debit your cash book, you, the person, the owner of the company, or you who is keeping the book of account, when you receive money and you debit it and you send the money to the bank, because the bank is holding that money on your behalf, it is not for them. So they will credit your account for you. And so when there's an increase in your money at the bank credits it. But for you yourself, when there's an increase in money, if you receive some money, you rather debit it to your account. Is that correct? So the top here, you see, this is cash book, the bank column. Good. So when there's an increase in cash in terms of bank deposit, you debit it to represent an increase. And in the bank, when there's an increase, the bank will credit it. So when there is a decrease in your cash, you pay something, you will credit it to your bank account. The same way when it is you pay something out of the bank, when you pay something out of bank, the bank will debit your account. So when you take your bank statement, you will see a narration or a description of items. First, you will see date, a transaction has been made. Then you will see a description about the transaction. And then if it is payment, you see it at the debit side of your bank statement. And if it is something that has been received on your favor, you see it in the credit side. And then you see the balance that is left in your account at the end of the period. Is that okay? Any questions
Yes,
so
sir.
far? Any questions so far?
Please, I think the previous slide you mentioned, the previous slide, yes, dishonored check. So here the drawer to pay is the one who have issued a check.
Yes.
Okay.
The person who issued the check is what we call drawer.
Okay.
And the person going to withdraw the check is what we call drawee.
Okay. Okay.
Drawee is the person going. So if Abraham issued a check to Queen, then Abraham is the drawer, Queen
Okay.
is the drawee.
Okay.
All right.
Queen, get ready for your check.
All right.
Any other question? Any other question before we move on? So I told you the reasons why a check may be dishonored. Is that correct? The reasons
Yes.
why a check may be dishonored. It's not in this slide, but you ought to know. As business students, you need to know reasons why a check could be dishonored. It is not always that there is no money in the person's account. And so, just as Abraham had said to Queen needed to be mindful and very careful not to accept every check for everything, because the person can issue the check to you and call the bank that I've issued this check number, this, but when it comes, don't pay. Have you seen?
Yeah.
Uh-huh. Or the person can issue the check whilst the money in his account is not up to that amount. So when it gets to the bank will dishonor the check. The bank will dishonor the check. So I always say that now that we have electronic payments, instead of Abraham giving you check, tell him to transfer the money.
Yeah.
And you know that you have received it. Anyway. Any other question, please?
So please, let's say I've issued a check to Queen of let's say $100,000, and then the money in the account is let's say $50,000, and then this is the bank that I've been working with, and then is it possible they do overdraft for the check or something?
No, if you have not arranged for it, they will not.
Okay.
What they can do at best, what they can do is that they will let your relationship manager call you.
Okay.
That, oh, Abraham, we have received a check of $100,000 from you, but your account balance is 50. Maybe you might have gone to another branch to deposit some money and they haven't key.
Okay.
So they will call you and tell you, oh, you have you presented some 100,000 check, but the balance in the account is not. What should they do? They will ask you.
Okay.
But if you want an overdraft, then it is something you had gone to negotiate with them.
Okay.
Sign the necessary things. You had an agreement. You signed the necessary thing, and there's also a limit to the overdraft.
Okay.
And there's a charge to it, an interest payment on every overdraft.
Okay.
So you have to do that arrangement before the check will be issued.
Okay.
Yeah.
Thank you.
Any more question, please? Any question? Nimatu? Ibrahim?
Yes, sir.
Any question? Any question?
No, sir, please.
Okay. Mr. Musa, any question?
No, sir. We are following, sir.
Okay. All right. So, in brief, those are the reasons you need to do the bank reconciliation. Now, in drawing up your bank reconciliation statement, you are to reconcile the bank statement with the corrected cash book balance. The things you would do when you are doing bank reconciliation. You are to reconcile the bank statement with unadjusted cash book balance. So we'll look at the two. Depending on our time, we'll see the first one, where you reconcile the bank statement with the corrected corrected cash book balance. And then if there's time, then we'll do the second one. But if there's no time, we'll do one side today, and then we'll look at the other side. Now, to reconcile the bank statement with the corrected cash book balance, there are 3 steps. The first step is that you check the bank statement and the cash book to identify any items that is omitted from any of the statements. Then you update the cash book with any omission from the cash book but is in the bank statement. For instance, any credit transfer or any bank charge or any standing order, any dishonored check. If you see any of such thing in your bank statement, you can use it to adjust your cash book. Then you prepare the bank reconciliation. So that is just a very simple thing. This is the format. That is if you are you are doing the adjusted cash book. If you are correcting the cash book before you do the reconciliation, then we say that balance, you bring the corrected balance in hand as per cash book, or you can say balance as per adjusted cash book. Is that okay? So this one, you can make a note whilst I speak. I try to explain it here for you to get an understanding. So you said bank reconciliation statement. And in accounting, any statement is prepared for a specific period. So as at a specific period, usually the end of the month or the end of the year. So you say bank record. Don't forget to bring the name of the company. You bring the name of the company, then bank reconciliation statement as at maybe 31st March 2026. Then the first thing that you bring, if you are adjusting the bank statement, the cash book, is a balance as per adjusted cash book. That is the corrected balance in hand as per your cash book. And then you drop the figure here. Then all unpresented checks, all the checks that you have issued to people to go and withdraw money, but they did not go and withdraw them. You can't find them in the bank statement that they have withdrawn them. You add it back to your cash balance. Does that make sense?
Yes, please.
Let's look at it this way. You have 2,000 in your bank account, and you have the 2,000 in your cash book. Then you issue 2 checks, 500 and 500, to 2 different people to go and withdraw. Then at the end of the month, you are expecting that you have 1,000 cedis left in your bank account. That is what has shown in your cash book because you have issued 1,000, 500, 500. But only one person went to withdraw his. So you took the bank statement at the end of the month and you are having 1,005. What happened? The simple thing that happened is that you have issued 2 checks. Only one went through. The other one, the person did not present it to the bank. And so that one that the person did not send to the bank is what we call unpresented check. So if you want to reconcile, if you want your 2 balances to be the same, then what you do is that you now add what the person did not go for, but you have deducted it from your cash book, add it back to the cash, and it will give you what is at the bank. Is that okay?
Yes, sir.
Good. And then you also add all wrong credits. There are credits that the bank has credited your account, meaning the bank has received something on your behalf for you. but you yourself, you don't have it in your cash book, and you want the cash book to balance with the bank statement, what do? You add it to the cash book, and it will be equal to the bank statement. For instance, you are having 100 cedis in your bank account, and then within the month, the bank also put another 100 cedis into your account again. You don't know. And now you have received the bank statement and you saw that there's another 100 cedis added to the 100 cedis. And you want your two balances to balance. What do? You also add the 100 cedis the bank has added, you add it to your cash balance. And then you also get 200. Then it balances. Is that okay? Then after adding the unpresented check and then the wrong credit, now you less bank deposit not entered on your bank statement. That is what we call uncredited checks. They are checks you send to the bank that the bank should put into your account, but the bank did not do that. So it's not in your account. And you have already put it in your cash book. You have already debited it in your cash book. You want the cash book to balance with the bank. So what do? You subtract it from your cash book and it will match with the bank. Is that okay? Then the next item to consider is wrong debits. Wrong debits by the bank or direct debits by the bank. Debits by the bank are payments the bank had made without your knowledge. Like I said, it could be a standing order the bank has made. It could also be a charge the bank has made, which you don't know. So since you don't know, you have not deducted it from your balance. So you deduct it from your cash balance, and then you get what we call balance as per bank statement. In that case, your bank statement and then your cash book will balance. Is that okay? So we'll take any question on that before we take an example. Any question?
Yes, sir, please, I have a question.
Yes.
Sir, please, I want to get the unresented check aspect again. You said it's a check that hasn't been, let's say it's an issue check that hasn't been cleared yet uh, the by the drawee. Is that correct?
That is correct.
Okay, sir.
Unpresented checks are the checks that you have issued, but the people you issue it to have not sent it to the bank to withdraw the money.
Okay, sir.
Uh-huh.
Sir, and then the uncredited checks are the checks that the bank hasn't yet has not yet put in my account, but I have
Yes.
credited it in my cash book.
Yes, please.
Sir. Thank you, sir.
Yes, please. So
Thank you.
there are times that you send checks, even sometimes cash, to the bank that they should debit and they should credit your account, and then they didn't do it. The time you were expecting them to do it, maybe they didn't do it. So all those things are what we call the uncredited checks. Uncredited checks. Is that okay?
Yes, sir. Thank you, sir.
All right. Any question from anybody? Madam Beatrice, are you okay?
Yes, sir.
All right. Josephine, are you okay?
Yes, sir.
All right. So we can pick an example, right? Anthony,
Yes, please.
are you okay, Anthony?
Hello, sir.
Anthony, are you okay?
Yes, sir. We can make progress, sir.
All right. So we'll take an example. So the example here is your cash book, which is at the top. That is the cash bank column in your cash book. And then the down is the bank statement. So when you look at this place, we say cash book, the bank column. This is the date. Then the amounts. Amounts are here for the debit side. And then you come to the credit side. This is the date, 1996, December. The dates are there. Then the narrations are here, and this is the amount. So let's look at it carefully. I want one person to read what is in the cash book. One of you should read what is in the cash book. Is Stephen there? Can Stephen read what is here? Stephen, are you in the class?
Sir, please, I'm here. Sir, please, I'm here.
So read what you see in the cash book for us.
Okay, sir.
Mhm.
Over the question is, sir, please bear it in a table form, so I don't get it properly.
Is that?
It's in a table form or from the 1996 one.
That is the cash book.
Okay, so December 1st balance.
What type of balance is that?
So this one is bank statement.
No, this is cash book.
Okay, so the debit and then the credit.
Yes.
Okay, and then the balance as well. So please on.
So I'm asking, this is balance BF or balance brought forward. So
Sir,
when
please,
you say balance, I wanted you to tell us whether it is a balance brought forward or something. That is what I wanted to know.
Okay, sir. Okay, sir.
So when I asked what type of balance is it, I was expecting you to tell us whether it is a balance brought forward, it is an opening balance or a closing balance, whether it is a debit balance or a credit balance. Those are the things I was expecting to hear from you. So
Okay, sir.
tell us, which type of balance is it?
So this one is a brought forward balance.
And then it is what? Is it a debit balance or a credit balance?
Sir, please, it's a debit.
It's a debit balance. Good. So continue.
Sir, please, December 3rd withdrawal. Lee. Also, the name is it withdrawal or just W Lee?
It's a name of a person.
Oh, okay. Okay.
And
Sir,
you see, which side of the cash book are you seeing that figure?
sir, please, it's in the credit.
Check it well.
Sorry, the debit. Sorry.
So if it's you see a figure in the debit column of a cash book, it can never be withdrawal.
Okay.
Do you understand?
Yes, sir.
If you have been reading your notes, then you realize that any debit in the cash book is rather payment received or some other thing that has been received. But if it were to be in the credit, then maybe you can do that assumption. Let's continue.
Okay. So then on 10th December, it's T Shank, which is 2,000, which is still at the. And then on 30th December is S Sin, which is 1,400.
Okay.
Okay, and then when you go to the credit side, December 8th, K1 is 1,600.
Okay.
And then
What does
December,
that mean? What does that mean to you?
say she's on, sorry, the person is on credit.
I don't get you. Take this as your cash book, Stephen. This book
Okay.
is yours. This is your cash book. So if you see K Young at the credit side of your cash book, what does that mean?
So he's owing me.
No, it's not owing you. Can someone help him? Can someone help him? Ibrahim,
Yes, sir.
can you help him? You have seen a payment. Oh, I think I have answered what I wanted. I was asking. You have seen something at the credit side of your cash book. Somebody's name with an amount at the credit side of your cash book. What does it mean?
Sir, it's either whether you got something from the person and pay or
Or what? Or you were owing the person and you have now paid.
yes, sir.
Okay. So Stephen, continue.
All right, sir. So please, on 20th December, C quote is 700.
Stephen,
And then
now
on,
what does that mean?
say over here with C quote, yes, we were owing him at first. And for now, we've settled him up.
Okay, that's correct.
Thank you, sir.
Continue.
So please, the screen is gone. Okay. And then on 29th of December is M tank, which is 100. And on 31st, balance carry forward is 48,000.
Sorry?
On 31st,
4,000.
December, the balance carry forward is 4,800. Sorry,
Yeah.
4,800.
Okay. So what type of balance is that? Is it a credit balance or a debit balance?
So it's
Can someone
a,
tell me? Can someone tell me what type of balance is that? The 4,800 in the cash book. The balance 31st balance carry forward 4,800 and it is at the credit side as carry forward. So what type of balance is that?
so it's a debit.
It's a debit balance. All right, that's
Yeah.
correct. So now you have done well. Let's get Mr. Opoku. Opoku, take us through the bank statement. This is the bank statement. So take us through the bank statement.
Hello, Reverend.
Yes, sir.
And I read.
Yes, read.
That's 1st December.
Yes.
3rd December. There's no debit. There's no credit. There's the balance is 2,800.
Very well.
Yeah. And the 3rd December, that's the check deposit. On the credit side, that's 1,000. The balance is 3,800.
Okay.
That's on 8th December. The check. That's a check number 76343. On the debit side, 1,600. And the total balance is 2,200. And on 10th December, check deposits. On the credit side, that's 2,000. And the balance was 4,200. And on 11th December, that is this standard check. On the debit side, that's 3,000. The balance is 2,200.
Sir, please, your screen is off.
It's on the slide that I've shared on the page, so you can just go to the slide and then you see it.
Okay.
Please, I continue.
Yes, continue, please.
Yeah. From 11th, from the 11th, this standard check. That's on the debit side.
You did not answer the question. No. I asked a check of 1,600.
Yeah.
In the debit side of your bank statement, what does it mean? Can someone help him?
I mean, in that.
Please, the screen is off.
Really?
No.
But some can see the screen, so I don't know.
No, so we can't see.
You can see your screen.
We are reading from the slide on the shared on the page.
Okay. Then maybe let me leave and come back. Let's see. Is it on now?
Yes, sir.
Yes, sir.
Okay, it's on.
Oh, it's on, right? So the question I was
sir.
asking is, on the 8th of December, check of 1,600. You've seen that on your bank statement. It is at the debit side. What does that mean to you?
Reverend, that means that's the money going out of my account.
Very well. It's a payment that you have made from your bank account. Thank you very much. Continue. Please continue.
Yes. On the 11th December, service charges. On the debit side, that's 30 cedis. And the balance was 2,170. And on the 12th December.
Did you notice something about the balances?
Yes.
Yes.
Yes, sir.
Yes.
Okay. What do you note? What did you notice?
It's keep on depreciating.
What do you see has the debit and the credit? What effect is it having on the balances?
Sir, please,
Anybody can answer me.
Sir.
Yes.
Please, with the debit, it keeps on decreasing, but with the credit, it keeps on increasing.
Okay.
So if it's debit, it decreases. If it's credit, it increases.
That's good. All right. So continue.
On the 12th December, auto pay rent. That's on the debit side, 250 CDs.
Okay.
And the balance was 1,920.
Okay.
On 20th December, check number 76344. On the debit side, 700 CDs.
Yes.
The balance was 1,220.
Okay.
And on 31st December, bank interest on the credit side, 50 CDs, and the balance was 1,270. On 31st December, same 31st December, a credit transfer commission received on the credit side, 300 CDs, and the balance was 1,570. On the same 31st December, the last 31st December is not clear. It's not clear. So maybe somebody can help me because the last 31st December is not clear.
I think it
I
was.
can only see the balance. That was 1,570.
There's nothing there, so it's the balance.
Yeah.
I think my network cut and then came back.
Yes.
Okay, go ahead.
So please, your screen.
My screen has still not come, eh?
Yes, sir.
Okay. I noticed my network cut and came back. I think that's the cause of it.
And when you come to the cash book and the bank column, 31st December, that balance
yes.
Balance before
I don't know if you are also having issue with your network. Abraham.
That's balance brought forward. 31st December, that's balance brought forward, 4,800.
Yes.
And the same 31st December, commission received, that's dash. Commission rate, is it recorded or received?
This one. This one. Are you talking about this one?
So I think he is reading from the slides he has. So he's done with this. He's on the next page.
No. Be on the page we are. Don't go to the next one.
Yes, I've come back to the page.
So what you are asking, go ahead and ask. Is it what I've highlighted that you are talking about? All right. So now you have finished
I was
reading.
I was at the slide. I went back to the slide. The slide you sent to us.
No. Don't be going to the slide.
Okay.
I send it
so now as the screen.
In case there is a challenge, you can go there. That's why I sent it earlier. So you don't worry about it.
Okay, then I'm done.
You are done. Okay.
I'm
so
done reading.
What we are saying is that look at this. You see the opening balance of the cash book. How much is it?
2,800.
It's an opening balance brought forward. When you come to the bank statement, you will see the same balance here. Is that correct?
Yes, sir.
So it means that at the beginning of the month, the accounts were balanced. Is that okay? Then
Yes,
we are
sir.
saying that every transaction that happened at the bank statement should also have happened in the cash book. Now, if there is any discrepancies between the two of them, then that is what we have to reconcile. And the first method is that you do an adjustment to the cash book before you do the bank reconciliation. So let's look at something. We saw here that the 2,800 opening balance is the same as in the bank statement. Is that correct?
Yes, sir.
Is that correct? Now, we also
Yes.
saw that on the 3rd, we receive 1,000 cedis from W. Lee. So when we receive, we debit our cash book. In the bank, it will be credited. So you come to 3rd, you see a check deposit, 1,000. It means that the money we receive from this man, W. Lee, has been sent to the bank and the bank has credited our account. Is that okay?
Yes.
Sir.
Good. So we move on to the 8th. On the 8th, our cash book is saying that we issue a check to K. Wong. That is 1,600. So we came to bank. He went to withdraw the money. So it has been debited. Is that okay? Now, on the 10th, we receive 2,000 cedis from T. Chong from our cash book. And so we send it to the bank. And on that 10th, there is a check deposit of 2,000, which means the money the check we send has been deposited successfully. Is that okay?
Yes,
Then
sir.
on the 11th, we didn't hear anything in our cash book. There was nothing on the 11th. But when we received the check, the bank statement, we saw that the 2,000 that we went to deposit was dishonored in the bank. So the bank credited it back, debited it back. So if you see, before that check was received, our balance was what? 2,200.
2,200.
And then when we received the check and then we sent it to the bank, it became 4,200. Then when we took the bank statement, we realized that the 2,000 was taken back and the balance went back to what? 2,200. And then we saw here from the bank statement that the check was dishonored. Is that correct?
Yes, sir.
What this means is that we took the check. When we took the check, we debited our account, our banks, our cash book, and sent it to the bank. When we sent it to the bank received it and credited our account. But when the check went to clearing, something happened and they couldn't clear it. So it was taken out of our account again. Please, do you understand?
Yes, please.
Yes.
Now, when it happened that way, you need to adjust your cash book. So there is a problem with this check, this 2,000. So there's a problem with this check. Okay? I want to paint it red. So now we saw that there is a problem with this check. It went and it came back. Is that okay? Now,
Yes.
we also saw that on 11th, that same 11th, some 30 cedis was taken out of our account at the bank. And we don't know about it. Because if we had known, we would have credited our cash book with that amount. But on the 11th, nothing happened to us to the best of our knowledge. But when we take our bank statement, we notice that 11th, the bank said there was a service charge. In other words, bank charge of 30 cedis. So it is not here. So that can also bring what? Differences. Is that correct? Then on the 12th, we didn't do any transaction. But when we took the bank statement, we saw that they said an auto pay rent. When you say auto pay, it's like a standing order, automatic payment, which is a direct debit at the bank. It's also 250. Are you following? But when you come here, we didn't pay any rent. We did not know that we are paying anything. So we didn't credit our account. Is that okay? Again, on the 20th, we ourselves saw that on the 20th, we paid C. Cock 700. We gave him a check of 700. And then when we came to the bank statement, he went to withdraw it. So our balance is 1,220. Is that okay? Now, on the 31st, we saw that before 31st, on 30th, we have received a check from S. Sin, 1,400. So we debited our account and we sent it to the bank, but we can't find it in the bank statement. Did you notice that?
Yes,
we can't find it. We send it to the bank, but we can't find it in the bank statement. So it is uncredited item. The bank did not credit this amount to us. Is that okay? Then on the bank statement, we saw that we have received some interest. We received some interest of 50 cedis in the credit side of our account. Okay? We receive an interest 50 cedis, but when you come to our account, there is no 50 cedis or interest received. So it means that at the time the bank was crediting our account with the 50 interest, we were not aware. But it is to our favor, but we were not aware. Again, the bank on that same 31st, the bank also credits our account with 300 cedis as commission received. But that one too, we don't know. So we did not also take care of it. Then at the end of the period, the bank is saying that our balance at the bank is 1,570. Meanwhile, we are thinking our balance should be 4,800. Is that okay?
Yes,
So, how do you reconcile this account? We had two methods, and the one we want to look at is where you do the correction to the cash book before you do the reconciliation. So right now, what are the corrections we have to do to the cash book? So correction number one, you need to bring your cash book balance at the closing period, which is this one, 4,800. So you prepare a new cash book, you call it adjusted cash book. How do you call it?
Adjusted.
Very well. You prepare a new cash book that you call adjusted cash book. And the balance that you will bring on that adjusted cash book is the closing balance on the original cash book, which is the 4,800. Now, after bringing that original balance, then you will now adjust the original balance with things that you were supposed to receive to add to it, and then things that you were supposed to remove from it. You adjust it with it. Then you can now get the actual cash book balance, and then you use it for your reconciliation. Is that okay?
Yes, sir.
So let's look at the next slide. The next slide is the adjusted cash book balance. So this cash book should be called adjusted cash book, right?
Okay.
It should be adjusted cash book. And then you bring your opening balance, which is 4,800. Is that okay? Now, we will go into the statement and then see the things we should have adjust to our cash book, and then we come and adjust it here. So this is it, the first one. Then we follow by the dates. If you are jumping in, you will miss it. You can miss something. So you follow by the date. So now we came here on the opening balance, everything is okay. 2,800 and then 2,800. On the 3rd, we saw check deposit 1,000, and it is also here 1,000. Nothing happened to it. On the 8th, we saw check withdrawal 1,600. It is also here. Nothing happened to it. On the 10th, we saw check receive here as 2,000. We sent it to the bank. It was received. But later on, we noticed that the bank has what? Dishonored it. So it took it off. What do we do? What should we also do? We go back to our cash book and then subtract it from it. And in subtracting it, you do what? You credit the cash book with what? The dishonored check. Is that correct? Is that understood?
Yes, sir.
Yes, please.
Anything you bring into the cash book, anything you bring to the credit side is you are subtracting or you are reducing. So the check that they gave us, when we received the check, this is what we did. We debited it when we received the check. Is that okay? Now, the check was dishonored. They didn't pay the check. So what do? We come and credit it back and then remove it from the total. That is how come when you use the closing balance, it means this balance is already in it already. Is that okay? So this is the closing balance, 4,800. It means that 2,000 is already inside. Now that we know that the bank didn't pay, the bank has dishonored it, we come to the credit side and credit it to the account. It means we are subtracting it from it. Is that okay?
Yes.
Is someone having a question about that?
Not really. Rev.
Yes.
So the previous slide,
Yes.
the dishonored check,
Mm-hmm.
it was check deposited, which have been credited to 2,000 to the account, and now the balance increased from 2,200 to 4,200.
Mm-hmm.
So the situation where they've not discovered the dishonored check, and then they come and make a withdrawal before they have discovered the dishonored check. Will the accounts go into red, or they would have to call on the account holder to come and make a deposit?
No, look at it this way. That check, we received the check.
Okay.
From our customer.
Okay.
He was owing us. He came to pay us.
Okay.
So we debited it to our cash book and sent it to the bank that they should credit our account with it.
Yes.
The bank received the check and credited our account.
Yeah.
But when the bank present the check to be cleared,
okay,
you see that when you send check to bank and you deposit it, they credit your account immediately, but you don't get the value.
Yes, please.
Until the check is cleared before you can get it.
Yes, please.
Now, when the check go for clearing and it couldn't clear from the customer's account, then the bank will take it off.
Okay.
So the bank has taken it off from the statement. So you see, when we send it, it's added to 4,200.
Yes.
But when they want to clear and it couldn't clear, maybe the customer is not having money in his account.
Yeah.
Or he has instructed that they shouldn't pay it again. So it was dishonored.
Okay.
So they take it off and our balance went back to where it was.
Okay.
So in our cash book, we have already received it in our cash book. So now that it is dishonored, we need to reverse the payment.
Okay.
By crediting our account.
Okay.
Assuming we have the person's account again, then the person's account will also be what? Debited. To show that what he's owing us, he did not pay.
Yes.
Okay. Are you all right now?
Yes, please. Thank you.
Good. So you come to your adjusted cash book and then you credit it with a dishonored check. Good. Now we go back to our bank statement. On the 11th, we saw there was also a charge of 3,000 bank charge. This bank charge is not in our cash book. So what do we do? It's a payment we have made to the bank for keeping our account. So what do we do? Who will tell me? What do we do? Hello?
Please, can you come again?
I'm saying that on the 11th, we saw in our bank statement that the bank has charged us with bank charges of 30 cedis. But that charge, we didn't know. So we have not charged ourselves in our cash book. What do we do if we want to adjust the cash book balance? What should we do? Is the question clear now?
Yes.
Sir,
Yes.
please, it means we'll go back to our checkbook and then credit ourselves.
Very good. So we come to our cash book and then we credit ourselves with the bank charge of what? 30 cedis. Is that okay?
Yes, sir.
Is there someone who did not understand why we have to credit the bank charge? Hello? Have you all understood why we have to credit the bank charge to the adjusted cash book?
Yes, sir.
Yes.
So we can continue.
Yes, sir.
All right. So we come to 12. The 12th December, we didn't make any payment or we didn't receive any money. But we noticed there was a payment in our bank statement. And it is an automatic payment for rent. So the bank debited our account with 250 cedis. When we took the bank statement, we noticed that we were supposed to have paid that rent and we didn't pay. But the bank paid it for us. But we didn't adjust our cash book. What should we do? What should we do? Who will tell me?
So, please, we have to credit our cash book.
Who is speaking, please?
Beatrice.
Beatrice. Okay, so you credit your account with the rent. Is that okay? So we bring the rent here and credit this cash adjusted cash book account with the rent. Good. Now let's continue. We also realize on the 20th, we make a payment of 700 and we came to the bank statement. We saw that the payment went through. So there's nothing we'll do again. It's correct. Again, we came to our bank statement on 31st, and then we saw that the bank gave us an interest of 50 cedis, but we were not aware, so we didn't add it, we did not debit it to our cash book. What should we do? When we say interest received, do you understand?
Yes, sir.
What does it mean?
No.
Or when you see an interest, bank interest in the credit side of your bank statement, what does it mean? You can see it, bank interest, and then it can be at the debit side. But this one is on the credit side of the bank statement. So what does it mean?
Sir, then it means your account has been increased by a certain amount of money.
Very well. What it means is that we have received it. What about if you had seen it at the debit side? What does that mean?
Then it means they've deducted it from your money.
Which means we have paid.
Yeah.
Okay, that I want you to use those terms. If it had a credit, it means we have received it. So they will add it to our money. But if it is were to be on the debit at the bank, then it means we have paid it. You get it? So in this case, the bank interest is at the credit side of the bank account, which means we have received it, but it is not in our cash book. So what do we do?
So please, I think we go to the adjusted cash book or the adjust cash book, and then at the debit side, we debit.
Very good. Now the next thing to that is there is the same 31st. We saw that there is a credit transfer in the bank statement, which is commission received. What does that also mean? What does that mean?
Means that the bank has credited our account with a commission of 300 cedis.
The bank has
Credited our account. He has
so
given.
what when you say the bank has credited your account, what does it mean to you?
It means that I have received that amount from the bank.
Very good. Excellent. So we don't know, but the bank is not telling us that we have received that amount. What should we do to our cash book?
We debit it.
We do what?
We debit it.
We debit it. I want you to speak with confidence. You debit it because there's an increase. We have received some cash. So you debit it. So you see, you come here, the commission is debited, and then the bank interest is also debited to the cash book. Now, let's go back to this thing. And then when you go back, you see there's no transaction again. Is that okay? There's no transaction. You just give us the closing balance. So what we need to do is to close the balance of the cash book. So you come here, like you said, you close the balances, you weigh the two sides, and this one you can see that the debit side is higher. So the total of the debit side is 5,150. So you bring them here, and then you subtract the total of the credit side from it. The credit side is 2,000 plus 30 plus 250, and that will give you 2,280. So you subtract 2,280 from 5,150, you get 2,870. So this become our balance carry forward. Our balance carry forward in the cash book. Is it a debit balance or a credit balance?
So it's a debit.
Very well. Any credit balance carry forward is in the debit credit side, is a debit balance in the debit side. Good. So this becomes our new adjusted cash book balance. Okay. So now you can now use this to prepare the reconciliation. Is that okay? So let's go to the reconciliation. This is the bank reconciliation statement as at 31st December 1996. Okay. So we want to start with balance as per the adjusted cash book. Balance as per adjusted cash book. And our adjusted cash book balance is what? This one. 2870. Are we following?
Yes, sir.
So we bring it. This is it. We bring our adjusted cash book balance. Then, after bringing our adjusted cash book balance, the format tells us we should add all unpresented checks. All unpresented checks. Then we notice that during our first cash book, there was an amount of money issued to M. Tong. Look at it carefully. On 29th of December, we issue a check to M. Tong, 100 cedis. But when you come to the bank statement, you can't find that check. Can you find it?
No,
Has
sir.
anybody? You see that it is not there.
Yes, sir.
So it means that we issued this check to M. Tong, but he did not present the check to the bank so that the bank will pay him. So we need to add this back to our adjusted cash book as part of our reconciliation. Are we together?
Yes, sir.
Good. So we add the unpresented check to the adjusted cash book balance, and it will give us 2978. Is that okay? And then if there is nothing again, then you now subtract or you less the uncredited checks. So let's go back and see whether we had some uncredited check. And there's one there. Over here, we receive a check of 1,400 from Essin. But when we came to the bank statement, there was no 1,400. That check has not been credited. Have you seen? So what do? We subtract it from our adjusted cash book balance. So you say, this is less uncredited check. Another name for it is a bank deposit not yet entered on bank statement. This place, I put this so that you can know the explanation. Are you okay?
Yes, sir.
So you add it, you less it from this figure. As soon as you less that from it, you should get what the balance of the bank statement is. So you less 1,400 from 2,970, and what it gave you is 1,570. Is that correct? So let's go back to our bank statement and see if it is the balance was what? 1,570. So it means our reconciliation has balance. Is that okay?
Yes, sir.
Any question?
Yes, sir.
So this is what we call bank reconciliation. This is what we call bank reconciliation. So the format, you can write it down. I want to give you the format again. It's just simple there. When you are supposed to do this one, you are supposed to do, you want to do the adjustment to the bank, to the cash book. And then you will use when you use the cash book to do it, this is what you get. So I want to add a note to it. Bank.
Sir, please, I have a question.
Yes.
Sir, can you please go to the previous slide?
Mm-hmm.
where we have the bank statement.
Mm-hmm.
Because I want you to go to that slide so that I can ask the question.
Okay. This place.
Very good, sir. So,
Okay.
sir, when we go to the cash book, M
Mm-hmm.
tank. So that is unpresented check to M tank was 100. So if you add it to the adjusted cash book, then later M tank presents the check to the bank. What would be the effect? I want to know the effect of that. Because we are adding the 100 to the adjusted checkbook. Then later
Okay.
on, M tank presented the check to the bank.
Okay.
So yes, sir. So that's the question, sir.
Okay. So this is what happens in practice. You see, the cash book remain as it is. But at the end of the period, when you want to reconcile the two, you want to reconcile the cash book balance to the bank statement. Then you notice that you had already deducted this 100 from your cash balance before you got the 48. Is that not it? The
Okay.
person who asked the question, are you following?
Yeah, I'm following, sir.
You have already deducted the 100 from your cash book balance before you got the 48 closing balance.
Okay.
But the person did not present the thing to the bank. So what
Okay.
it means is that you have reduced your bank balance by that figure in your cash book. So the bank will be more by that figure from the cash book. So if you want to reconcile the cash book to the bank balance, now that you know that MTAN did not send that check, you just add it back to your closing cash balance, and then you are supposed to get what the bank is having.
Okay.
Now,
So the
if
idea
you
is
have done that, it doesn't mean that you have removed it from your cash book. But the cash book itself, it remains as it is. But the adjusted cash book is where you remove it from. So if the next month Tang sent the check and took the money, you see that it will now appear in the next month's statement. Then you can now take it off from the bank reconciliation that you did the previous month. Does it make sense?
Okay. So the idea is that it was subtracted, it was deducted from the amount. So
Yes.
therefore it doesn't
Look,
affect it. Okay.
look at it this way. This is the check.
Okay.
This is our adjusted cash book balance. Is that correct?
Yes. Yes,
And
sir.
then we saw that we had already issued 100 to somebody, but the person didn't go for it.
Yeah.
So we just added back to it.
Okay.
But then you will have a list of all those checks. Assuming there are many checks, you have a list of all those checks with you. So
Yeah.
if the next month he sent this check, then you are going to cancel it out.
Oh, okay. Okay. Okay.
So it will no longer be part of your unpresented in the next month because
Okay.
he has presented it.
Okay.
Do you understand?
I get it,
Okay.
sir.
So I want to put the format for you. So we said that's one of the challenge you have on online teaching. When the thing, you can just write it simply. Sorry, let me just, I want to drop this. Then, all right, so. What we want to do is want to insert a line. So you said balance as per adjusted cash book. Then you drop it. You the figure. Let's say this is the figure. You add what we call unpresented checks. So if the checks, they are 20, you make sure you list it somewhere. And then you bring the total. You bring the total to this place. Are we okay? That will give you a figure. Maybe I should have done it in an Excel. But I wanted it to be part of your notes. So okay. Then you less on uncredited checks. And that should give you your balance as per bank statement. When you see this, you know it's balanced. All right. So in simple terms, this is what we trying to do. I want to drag it down, then you see it clearly. Okay. Good. Is it showing well to you? Is it showing well to you?
Yes, sir.
Yes, sir.
So this is the format for the bank reconciliation. Okay. This is the format of the bank reconciliation. A simple format. Maybe what you need to do is to put the name of the organization. So let's say the name of the organization is HRM. So you put HRM, bank reconciliation statement as at 31st December, maybe 2026. This is date. Then the bank balance as per adjusted cash book. You have it. Then add unpresented checks. Then less uncredited checks. And then you get your balance as per bank statement. What it means is that you are doing it, you are adjusting your cash book to get what the bank has given you. So automatically, after adjusting the first thing and then the second thing, these are the things that the bank you have issued out. The things that you have credited to your cash book, but the bank did not deduct it from your bank, is what you are adding back. And the things that the bank has added to you, but you have not debited it to yourself, is what you are subtracting. When you do that, then you will get the balance that the bank has gotten. So this is the format. Is that okay? Good.
Yes, sir.
Okay. I'll leave this one here. Now, so this is the only adjustment caused by timing is the presented and unpresented and then uncredited. So this whole statement is what I refer to as the uncredited.
Okay.
Bank deposit not yet entered on bank statement is what I refer to as what? Uncredited. Is that okay? And then
yes.
This one is payments made, but the customers did not send it to the bank to receive payment. It's what we call unpresented.
Check.
Is that okay?
Yes,
So
please.
it's only these two things that is supposed to appear on the bank reconciliation.
Unpresented and then
Uncredited.
Uncredited. Okay.
They are the things that happen as a result of time differences.
Okay.
But the rest could be adjusted in your cash book.
Okay.
That is if you were asked to prepare adjusted cash book and the bank reconciliation. But if you were not asked to prepare the adjusted cash book and say you were asked to just prepare the direct reconciliation, then you are going to take all the things that you will be subtracting from the bank, from the cash book. You take it and come and subtract from here. And that is the second stage. I don't want you to be confused. So I want you to just get this one. If you get this one, then second stage will introduce you to the other one. Is that okay?
Yes.
Good. So in summary, what are you supposed to do when you get bank statement and then your cash book? What are you supposed to do? You first check from your cash book and then your bank statement and see the items that were supposed to be in your cash book, but they were omitted. And then you adjust it in your cash book. Then after you have finished, you now prepare the bank reconciliation. And the bank reconciliation, you only take note of the unpresented checks and then the uncredited checks. Is that okay?
Yes, please.
Good. So we will end it here, and then the next time we'll come and continue with the reverse, the other side of it. But
Okay.
I want to ask you something. You see that from here, let me go to, from here, we said balance as per adjusted cash book. And then we added what? What did we add? I want you to talk. What did we add to it? Hello?
Hi.
Balance as per bank statement.
Look at it carefully. Look at this format carefully. We said balance as per adjusted cash book. Then we add what?
Unpresented check.
Unpresented checks.
Yes.
And then we less what?
Uncredited.
Okay. Turn it upside down. Turn it upside down. Turn the whole format upside down and then tell me what you can get. What can you get?
So please, I think over here we'll get deduct presented checks.
Start from somewhere. You are jumping. Turn the format. You see, what we are saying is, assuming this is A, and then this is B, and then this is C. Sorry, this is C. Then this is what? D. Is that not it?
Yes, sir.
So the format is giving us like A plus B minus C equals to D. Is that not it?
Yes.
So I'm saying that turn it upside down and see what you can also get.
So, sir, the first one will be balance as per bank statement. Then, we less uncredited checks.
No.
Okay.
Put. Let's. Okay. What should I do?
Let me try.
Should we put a figure to it?
Yeah.
Because the reason I want you to note what I'm trying to show you again is that there could be a circumstance where you are giving the bank balance, but you are not giving the cash book balance. You can work it from reverse.
Yeah.
Do you understand?
Yes.
Right now, what we had on this one now is this. This is what we have. A plus B minus C equals D. Is that not it? Oh, my minus didn't show well. I'm coming. Is that not what is showing here?
Yes.
So when you turn it, this is how it will look like. It will be D plus C minus B will be equal to
A.
Have you seen it? Have you seen it?
Yes.
So you let's put some figure there and see. Let's put some figures there and see. Let's say this is 5. This is 2. This will give us 7. And let's say this is what? Let's say 3. Then this will give us what? It will give us 4. Is that correct? Is that correct?
Yes.
Hey, Are you with me?
Yes, sir. Yes,
Yes,
sir.
we do.
4. Yes. 4.
So what we are saying that assuming our cash book balance after adjusting gives us 5, and then our total unpresented check is 2. Then when we add it, it will give us 7. When you less the uncredited check, which is 3, it will give you 4. Is that correct?
Yes, sir.
So turn it upside down and see whether you will get 5 when you do it. That is going to be 4 plus 3. It gives us what? 7.
7.
Minus 2. It gives you what?
5.
5. Have you seen it?
Yes, sir.
Yes, sir.
So what I'm saying is that assuming they didn't give you the adjusted cash book, but they have given you the bank statement, the balance, and then told you these checks were not presented and these checks were uncredited, can you find your cash book balance? Can you find your cash book balance? Hello.
Hi.
Do you people okay? Take your jotters. Take your jotter and let's do something. Let me test you on something. I think it's time. Take your jotters and let me test you on something. I'm just taking this thing off. So you could have a clear thing here. You shouldn't be confused. Have you taken the jotter?
Yes, sir.
Yes.
Okay, so write this one. So
Yes, sir.
giving closing bank statement balance. Giving closing bank statement balance of 1,570 cedis. If your unpresented check is 100 cedis, and your uncredited checks are 1,400, prepare a bank reconciliation statement to show your cash book balance. Prepare a bank reconciliation statement to show your cash book balance.
Is the figure again?
Did someone get it?
No,
Did someone
please,
get
the
the
figure.
question?
Go over the figure again, please.
Has someone gotten the question?
No, please go over the figure. The figure.
I want the one
Go
who
over.
got it to go over.
Okay. Giving a closing bank statement balance of 1,570. If your unpresented check is 100 cedis and your uncredited checks are 1,400, prepare a bank reconciliation statement to show your cash book balance.
Excellent. So can you try it? That is the reverse of what we did. But you will not get examination question like that. in examination, you'll be given the bank statement and then a cash book so that you yourself, you determine what is uncredited and unpresented. Is that okay? So, any questions so far? Any questions so far? Hello?
No, not really.
So if there's no question, I think we will end it here today. In our next opportune time, we'll complete the bank reconciliation. But this is the basic bank reconciliation. So you need to go over it and get it very well for me. Is that okay? Ask questions if you are not getting it. Take this one, go over and over and over and over. And then when we come, we look at it. I have some examples here you can go through, but when I come, we will look at the rest of the down one from here, beginning with unadjusted cash book balance. That one, everything will come here into the reconciliation. But with adjusted cash book, you do the other omitted things inside the adjusted cash book, and then you bring those that have time difference only into the bank statement. Is that okay? So it's a simple, this is the format, very simple. This one, you just have to know it in your mind. The format. You have to know it by heart. Somebody will say by heart. That if you are doing bank reconciliation, this is what, if you start with the adjusted cash book, you add unpresented check, and then you less uncredited check, and then you get your balance as per bank statement. If you start with the balance as per bank statement, you add uncredited and then less unpresented, then you get your balance as per adjusted cash book. Is that okay?
Yes, sir.
Any question? Any question? If there's no question, I think I would have to send this one rather to you because we did some few things here.
All right.
Okay.
Thank you.
Let me see those who are not in class. Supposed to be 14. We had 10. So 4 people are not there. Do you know about them?
We are supposed to be 18.
18.
Yes.
So far, I knew of 14.
Okay. We're supposed to be 18.
So 8 people didn't attend?
Yes. Some messaged me back though that I think 2 persons mentioned they having network challenges, and then 1 person also mentioned she had a power outage. Yes.
Okay, so it's their responsibility to know what we did?
Yes, please.
And then sit for an exam for it?
Yes.
Yeah. When are you having the next face-to-face?
That is 9th and then, yes, 9th May.
9th and 10th May.
Yeah, so 9th May, we are having you 9th May.
And when is the exam?
The exam is, please, I have to check and get back to you.
When should we write our MISEP?
Coming Saturday is not bad.
Okay.
Yes, please.
But the MISEM, I think you write MISEM when you come to face-to-face.
I think the date for midterm is supposed to be this week. So we did submit some for the other courses.
You did it online?
Yes.
So that is assignment, right?
The midterm we did midterm online for I think three courses.
Okay.
Yeah.
All right. We'll see what we'll do.
Yes, please.
We'll see what we'll do. This is accounting, so we'll see what we'll do.
Yeah.
Everything will be fine.
All right, please.
All right.
Thank you very much, Chef.
Thank you too. Have a nice weekend too.
All right.
Bye.
All right. So our next lecture begins soon. Let's try and then get in touch with our colleagues who are not able to join and then encourage them to join. Okay. Like I always say, we are all trying, and we are pushing. Small, we'll get there. All right. So see you soon in the next class.